is a quick video just to answer some of your questions and comments that you leave on the blog and the socials. So first of all, thank you very much for doing that. Keep those questions and comments coming because it allows me to know what you guys are wondering, the questions you're asking about trading and particularly professional trading and how it all works. So today I'm in the office here at Smile, and basically what I thought I'd do is just answer a few of your questions. And one of the questions that we got came in, or was given to us on the blogs or the socials, is about positive correlation. So we did a video about things that are inversely correlated or negatively correlated, and some people are asking, what about things that are positively correlated? So what I thought I'd do is just give an example of some currencies that are positively correlated and explain why that happens. So first of all, the currencies I'm going to talk about are pretty obvious. Many of you might have heard of it, but some of you wouldn't. The Swiss franc and the euro. Now, on the face of it, they might seem like two completely different things because the Swiss franc, of course, isn't part of the euro. It's a completely different country and different European, well, different monetary mechanism. So basically, the reason that they're positively correlated, which means that when the euro goes up, the Swiss franc goes up, and when the euro goes down, the Swiss franc goes down, is because how interlinked they are in terms of trade and commercial partnerships. So basically, if the euro area went downhill, if the economy crashed and collapsed, that would also impact the Swiss economy because Switzerland sells as big trade partners with Europe and vice versa. So those two economies are so interdependent on each other that particularly the euro for Switzerland, so if something bad happened in Europe and the euro went down, that would also affect the Swiss franc and that would follow suit. Vice versa, if the European economy was doing really well and the euro went up, the Swiss franc would also follow, because what's good for Europe is generally considered as good for Switzerland, and what's bad for Europe is generally considered bad for Switzerland. So those positive correlations are where two currencies move in exactly the same direction. They exist, and that's one example of a positive correlation. You also get positive correlations across different asset classes, and there's two things to bear in mind. First of all, the first thing to bear in mind is that it depends on how interdependent those two assets are. But secondly, and this is probably the most important, nothing is set in stone, nothing is 100%. There's no fixed rules that say that this or that has to be positively or even negatively correlated. It all depends on what's going on at the time. So for example, if Switzerland stopped trading so much with Europe and became a major trading partner of the US, or became more dependent on another economy, then of course that interrelationship between those two currencies would de-link, it would end basically. And that happens across the board, when it's asset classes, depending on the economic situation, depending on what's going on with central banks. This decoupling can happen any time, even if it's just temporary or more longer term. But basically, positive correlations exist. That's an example of why. But it is important to bear in mind that there's no fixed rules, not set in stone, and they don't have to be there. It all depends on the